Welcome everyone, Rob Overstreet here, Harbor Drive Holdings, Real Estate Investments. Today we're going to talk about real estate tax. And before you turn off the video or go take a nap on your couch, just hear me out here. You know, there's a big reason why many of our country's wealthiest people allocate a large percentage, if not all, of their investment portfolio to real estate assets. And that's because real estate affords investors quite a few tax benefits as given to us by the IRS, and so it's a very tax efficient vehicle. You know, when we're underwriting and we're looking at prospective apartment acquisitions or other commercial real estate acquisitions, a lot of times we don't consider, you know, the tax benefits, or it's not something that you can easily underwrite for, right? Not that this is a bad thing, but usually we focus on things like IRR, cash on cash, annualized return, when are we going to exit, these kinds of things, but it's really not painting the entire picture to our investing partners. And so today I want to just explain a couple of quick, really great benefits that are afforded to real estate investors that we all can enjoy. The first one, of course, is, you've probably heard of this, real estate depreciation. So when we have our investing partners come along with us in a given acquisition, at the end of each year we send all of our investing partners K-1s that show all the tax benefits, including depreciation. So the IRS has it written in their rule book that residential real estate, which is the home that you live in, or in our case it'd be an apartment community that we invest in, the IRS says that you can depreciate that asset over a period of 27.5 years. Where'd they come up with 27.5 years? Who knows, but we know that it's a great benefit for investors like us. So what that means is that they basically say that the usable lifespan of a residential property or an apartment community is 27.5 years, meaning that each year we can write off 27.5% of the deal against our annual profit, right? Which would be the cash flow, etc. And so what this means to you as an investor in one of our deals is that at the end of the year you get your K-1, and over that time we've been sending you quarterly cash distributions. A lot of times the depreciation that we write off of our profit and our income can actually exceed the amount of money that we've sent you in the quarterly distributions, meaning that even though you've been receiving cash flow from these deals, at the end of the year, we actually show that you received a loss over the same period. Tremendous, tremendous benefit that real estate investors enjoy, as well as our investing partners. The second item is expense write-offs related to real estate. Now, I'm not going to get into the weeds about this, but basically there's ways using the magic of accounting that we can put lots of our operating expenses above the line, right? So capital items, insurance costs, any management fees, in an effort to reduce our overall cash flow taxable income. The last thing I wanted to talk to you about, and these are just three great examples of why real estate is a very tax efficient investment vehicle, but the last one today that I'll cover is passive income tax bracket, right? So if you have a job, if you go to work every day, you pay federal income tax and a variety of other taxes depending on which state you live in as a W-2 employee. Well, as an investor in one of our deals, you're receiving passive income, and that gets taxed on a different level using passive income taxes and or capital gains when we exit on the back end. Passive income taxes and capital gains tax in almost every case are much lower than the federal income tax rate, again, depending on which bracket of the federal income tax scale that you land in. So again, in this country and all over the world, many of the wealthiest people in the world allocate a large chunk, or if not all, of their investment portfolio to real estate because of all the wonderful tax benefits that it provides. So again, if you haven't left and gone to sleep on me or shut the video off to this point, I know tax is a kind of a boring topic to discuss, but you know what they say, death and taxes, right? I'm sure we've all heard that before. So If you haven't invested in real estate, or if it's something that you're curious about and would like to learn more, I encourage you to go check out our website, harbordriveholdings.com. There's lots of resources and blogs and things, and we try to publish new content on a regular basis there. And like always, guys, if you'd like to learn more about our company, who I am, throw us a follow on any one of our social media handles. We're on Facebook, on Instagram. You can check me out on LinkedIn as well. So again, Rob Overstreet, Harbor Drive Holdings Real Estate Investments. See you on the next one.